In part 1 lecture, we completed and balanced off all the cash journals of our retail store. In part 2, we will continue with the preparation of credit journals for transactions that occurred on credit basis. We will continue with the previous example of Ulandi Retail to record all outstanding transactions which were omitted in the cash journals. The format of the accounts receivable journal will have the following columns: the document, the date, the details, the accounts receivable column to record inclusive amount, the output VAT, sales and cost of sales, where the perpetual inventory system is in use. In this journal, we will record goods sold and issued to debtors or clients. The duplicate invoice will be used as a source document. The accounts receivable allowance journal will have the following columns: the document, the date, the details, the accounts receivable column to record inclusive amount, the output VAT, the debtors allowance, and the cost of sales. In this journal, we will record goods returned by clients or debtors. We will also be recording correction of errors made on the invoices. The accounts payable journal of Ulandi Traders for the end of March 2018 will have the following column: the document, the date, the details, the accounts payable column to record amounts including VAT, the input VAT column, the trading inventory column to record amounts excluding VAT, the sundry column, and the sundry details. In this journal, we will record transactions where goods were bought on credit from creditors or suppliers. The source document that will be used in this journal is the original invoice. The accounts payable allowances journal of Ulandi Traders for the end of March will also have the following columns: document, the date, the details, the accounts payable column to record amount including VAT, the input VAT, and the trading inventory column. In this journal, we will record goods that were returned to creditors or suppliers. Also in this journal, we will record corrections of errors on the invoices that we have received. The source document for this journal will be the original credit note. To record transactions that were excluded or omitted from cash journals, we will start with line transaction 2, where stationery was bought from P&A Stationers for 750. We said this transaction is a credit transaction. We are buying here stationery on account. This transaction will then be recorded in the accounts payable journal as follows. Under the source document, we will use the original invoice that we have received from a creditor, dated the 2nd. Under the details, we write the name of the creditor, P&A Stationers. In the accounts payable column, we reflect the amount inclusive of VAT, calculate VAT on the inclusive amount, and arrive at 97 rand 83 cents. Deduct VAT from the inclusive amount and arrive at the exclusive amount of 652 rand 17 cents. And because it's under the sundries, we will then reflect the details as stationary. The second purchase was a vehicle bought from XPS dealers on account. The amount 455,000 rand. On this purchase, we paid a deposit of 55,000 rand, which was recorded in the payment journal. Therefore, because it's a credit purchases, we will record it in the payable journal. We will show the original invoice under the source document, dated the 2nd, name of the creditor, XPS dealers, the total amount including VAT, 455,000 rand, calculate VAT on the inclusive amount, which is 59,347.83 cents. Determine the exclusive amount, which will be 395,652 rand 17 cents. Because we are buying a vehicle, we will show it under sundries, and the details of the sundry will be the vehicle account. In transaction, line 5, goods were supplied to the following customers: B. Brown and S. Swart. These we said are goods that are supplied on credit. They will therefore be recorded in the accounts receivable journal. We will record them as follows. Under source document, we will use the duplicate invoice. Why the duplicate invoice? Is because the original invoice was issued to B. Brown. Therefore, we remained with the duplicate, which will be used as a source document. It's dated the 5th. Under details, we write the name of the client or the debtor. In the accounts receivable column, we show the amount including VAT of 7,150. We calculate VAT on the inclusive amount to arrive at 932 rand 61 cents. We deduct the VAT from the inclusive amount to arrive at the amount of 6,217 rand 39 cents as sales excluding VAT. Because the perpetual inventory is in use, we have to determine the cost of sales. We are given that the markup is 30% on selling price. Therefore, selling price as our base will be expressed as 100%. Then we determine our cost price percentage by deducting the markup from 100, and we will arrive at a cost percentage of 70. Then to calculate our rent value, we will take the amount that we know of sales, 6,217.39, divide it by 100, which is the percentage corresponding to the amount given, multiply it by the percent that we don't know, which is 70, to arrive at 4,352 rand 17 cents as our cost of sale. The next credit transaction was made to Swart. Note that here we are given the cost of the sales, which is 1,339 rand 13 cents. This entry, because it's a cost, it will be shown under the cost of sales. Now, We said value added tax, it's not calculated on cost. Therefore, we will have to determine first our sales by using the markup percentage. We have determined that our cost is 70%. Our sale percentage is 100%. Therefore, we will take the amount that we know, which is cost of sales, multiply it by the percentage that we don't know, which is 100, divide it by the corresponding percentage to the amount that we know, which is 70, to arrive at a sale, excluding VAT, of 1,913 rand 4 cents. Then to that, we will multiply it by 15, divide by 100 to arrive at our output VAT of 286.96 cents. We then add the output VAT to sales to arrive at our accounts receivable of 2,200. The next transaction, it's line 7. The trading inventory bonds from Maxi Traders of 3,700. This transaction will be recorded in the payable journal because it's inventory bought on account. We will use the original invoice received, dated the 7th, the name of the creditor, Maxi Traders. In the inclusive column, we will write 3,700 rand. Calculate the input VAT on the inclusive amount and arrive at 482 rand 61 cents. Deduct it from the inclusive amount to calculate inventory excluding VAT of 3,217 rand 89 cents. Next is transaction 9. A credit note of 150 was issued to B. Brown for an overstated invoice. Here we are dealing with a credit note, therefore the entry will be recorded in the accounts receivable allowance journal. It will be recorded as follows. Under the document column, the source document will be a duplicate credit note. Why a duplicate credit note? The original was supplied to a data. It's dated the 9th. The name of the data is B. Brown. In the total column, we write the amount inclusive of 150. We then calculate output VAT or the inclusive amount and arrive at 19.57 cents. Then the difference will be the data's allowance column. Because we are using a perpetual inventory system, we will then have to calculate the cost of sales. We've already determined that cost of sales was 70%. We will take now the amount, which is our selling, multiply it with 70, which is the cost price that we want to determine, divide with the corresponding percentage for the amount given, and arrive at a cost price of 91 rand 30 cents. The last transaction is transaction 11. The trader received a credit note from Maxi Traders of 250 rand for goods returned. Here we are dealing with goods returned to a creditor. Therefore, the entry will be recorded in the accounts payable allowance journal. We will use the original credit note because we have received it from a creditor, dated the 11th. The name of the creditor is Maxi Traders. The total amount, including VAT, of the return is 255. Calculate the input VAT on the inclusive amount and arrive at 32.26 cents. Determine the inventory excluding VAT of 221 rand 74 cents. Now all the transactions for the month have been recorded into various journals. This will be now the completed journal for the month for all goods that were purchased and also goods that were returned to suppliers. Therefore, the journals for accounts payable must be balanced and closed off. I want you to do the balancing. Test yourself by doing the calculations of the subtotals and make sure that you are cross-casting for both accounts payable and the allowances journal. Do the same thing also with your accounts receivable. Close them off by calculating the subtotal and making sure that both of the journals are cross-casting. Do this exercise to practice the subsidiary journals. Every topic completed will be followed by an exercise. Make sure that you keep up with your work because some of these practice exercises will be included in your assessment. Enjoy it. Thank you.